Hello, everyone. Welcome back to LogTech Live. I'm Eric Johnson, your host almost every episode. I missed last episode because I was on vacation, but it is great to be back with you all. If this is your first episode that you're catching, thank you so much for coming. Hope you get a lot out of our episode today. We have a great guest who I'm really excited to dig into on a bunch of investing and global logistics questions. If you're a regular viewer or attendee, thank you so much for your support of the show. It means a ton to me that people are getting value and having fun here. For those who don't know me, I'm Eric Johnson. I am the senior technology editor at the Journal of Commerce when I'm not hosting this show. We do this show twice a month, first and third Friday of every month. If there's 5 Fridays in a month, you get a free week. You get a free Friday morning to actually do your day job. But I'm really glad you're joining me today. This is our pre-Thanksgiving episode for those of you in the U.S. who are looking forward to a little time off with family, or alternatively not with family. If you don't want to be around your family next week, that's really your choice and not mine. But glad you could join us today. So. First, I wanted to say, as I mentioned, I missed the last episode. Thank you so much to Brian Glick at Chain.io and Christian Hammer at TradeLens for keeping the LogTech Live ship afloat while I was gone. I was on a great vacation / work trip in London and Paris. Highly recommend being able to turn like a day or two of work in Europe into a vacation. It was had a lot of fun and it was really great. And the weather kind of complied. We were there. So it was a great time, really good time to spend some time with my family and get away from the crazy world of logistics for a few days at least. But I'm really glad to be back with you. Before we get into the news of the week, I wanted to highlight, I talked about TPM Tech coming up before. We're only like 3 months away now. It's crazy. When did this happen? We're literally in the stretch run of planning TPM Tech. This week, we announced a new element of TPM Tech. And by the way, in the banner there, there's a code for new registrants. So if you've already registered, sorry, too late. I appreciate it, but it's too late. This is for new registrants to get 25% off a pass to TPM Tech, TPM, or the 2 conferences. A new element we sort of unveiled this week is called DevCon, TPM Tech DevCon. And this is an idea that has been in the works for me for a while, based on some discussions with tech vendors coming out of last year's TPM Tech, was to build a part of the program where people in development roles and engineering roles, the real wonky people who actually make this software work, for them to get together and kind of sort out common challenges, not secret sauce type stuff, but something that, they could kind of help other with and for the betterment of everybody. So everybody's adoption gets higher, sorting out standardization issues, common challenges, right? So that's going to be a new part of TPM Tech. Really excited about it. It's still taking shape, and I'm going to be soliciting comments and feedback from you all about what that should look like and the topics that we should discuss at TPM Tech DevCon. So please do not hesitate to get in touch with me. Twitter, LinkedIn, eric.johnson@spglobal.com. All of those work to send me feedback. So really encourage you to do that. So let's move to news of the week before I bring my guest on today. The first story I wanted to highlight is one that my colleague Greg Noller did just this week about some looming regulatory mandates on container ships. Well, all ships, especially container ships, since that's what we focus on at the Journal of Commerce in particular. Some regulations that are coming into effect. And there's an interesting element that came to light this week with Maersk saying there's not a whole lot of clarity on enforcement of the new carbon intensity rule that is coming into effect January 1st. Why does this matter? Well, there's been a lot written about demand going down on the container shipping side, especially Asia to Europe and North America. That's dragging down spot rates. It probably will drag down contract rates, especially in the Trans-Pacific next year. But the counterbalance to that is, well, you have a lot of capacity coming online in 23 and 24, container ship capacity. But the counterbalance to that is you have new IMO rules that that are grading essentially every container ship on carbon intensity. And so if you have too low a grade, you have to comply with this new rule in one way or another. It means you either stop running the ship or you change the fuel it runs on. Those are not ideal. The other thing you can do, and probably more likely, is slow steam. So you can sail slower and use less fuel and have less carbon intensity. So, but enforcement is going to be a real issue, right? And as these rules come into effect, how are container lines that want to comply, how are they going to comply? Are they going to be checked for compliance? This is something that Maersk brought up this week. So we're going to hear a lot about this. We're about 5-6 weeks away from this rule going into effect, and it's going to be pretty interesting to see how it impacts, sort of the operational deployment of ships. I have a feeling that it's not going to be a fantastic scenario for shippers, just because upheaval to vessel schedules and sailing speeds is never ideal in terms of stability and keeping sort of supply chains kind of going in a steady rhythm. So definitely encourage you to read that story. The next story I wanted to highlight is one that I did right before my vacation. So it's a couple weeks old now, but wrote about Shipamax getting acquired by WiseTech Global. Shipamax is a company I've written about a few times. They were essentially doing sort of document and data extraction from email and other formats that forwarders tend to rely upon to exchange information with one another. WiseTech acquired them at the beginning of this month. The amount wasn't disclosed. Interesting for a couple of reasons. One, I've talked a lot about how automation is sort of permeating the industry in very imperceptible ways. And this is something we're going to be talking about at TPM Tech in more depth. But in terms of this acquisition, this gives WiseTech, theoretically, it gives them an automation play to sort of infuse across their solutions if they so choose. It might end up just being a standalone solution, like with some other WiseTech products that have been acquired. It also is a signal. They made an acquisition of of Bolero earlier this year, which is trade finance, electronic documentation provider, and it's sort of a signal that WiseTech is back in the M&A game after a bit of a quiet period during the pandemic. If you recall, a few years ago, they were buying companies like crazy. At one point, almost one a month for a decent stretch. So. Very interesting, and it will be interesting to see sort of like if this is the first domino to fall and other sort of startups in the automation space end up getting acquired into kind of the big logistics, ERP, operating system, TMS type providers. So that's the other story I wanted to highlight. And then I wanted to highlight the newsletter that I put out 2 weeks ago, not the one that just came out this morning, but 2 weeks ago, with guest post from Brendan Tompkins. He's written 3 posts for me on the newsletter around street turns. So I definitely encourage you to read the whole series. They're not terribly long, and they will give you a whole bunch of background about why there's been so much trouble sort of getting adoption of street turns. It turns out it's not just because people like to turn their back on good ideas. There's some operational complications and some cultural issues, and just it's been a tough lift to get it beyond a certain percentage of moves where the empty import box gets turned around outside the container terminal and turned into a laden export load. This idea makes too much sense, and in the last one, the one I've noted here, Brendan makes the case that if the industry, and maybe at a port ecosystem level, individual port ecosystem level, if they make the decision collectively to say, let's figure out how to make a street turn happen first, and then if it doesn't, then we don't do it, rather than looking at street turns as only an opportunistic thing that comes up every once in a while. So definitely encourage you to read this one as well as the previous posts that Brendan had on my newsletter. That's ericjohnson.substack.com. But with no further ado, I'm really delighted to bring my guest on today. It's Shereen Zarkani, who's from Maersk Growth, head of growth, managing partner. What's your formal title, Shereen? All of the above? Oh, I think you're on mute, Shereen.
Here we are. Okay.
There we go. The classic mute. 3 years later, we still haven't figured out mute.
I know, right? Such a rookie mistake.
All good. All good. Shereen, so glad you could join us today. I always like to start out with background. Like, tell us a little bit about your background and what brought you to the role you're in right now.
Okay, so let me start with my title. You asked about that. So today I'm managing partner and have the pleasure of heading up Maersk Growth, which is the venture arm for Maersk. It has only been a couple of years in this role, but 21 years at Maersk. So actually, you can say I'm a wise corporate soul. At least some of the entrepreneurs I speak to give me a very funny look when I say for 21 years. I've joined in Egypt, originally where I'm from, and they have largely been commercial roles. So working together with customers, I'm very passionate about identifying and solving interesting customer problems. So move intersection between sales, customer service, marketing, strategy, transformation, and now innovation. My last role, I was heading up our global sales force, our 3,000 sales guys and girls, as we try to figure out what is this global integrator that we want to become. It was really a fantastic transformation role where we're moving from selling one product, which is essentially a steel box, to end-to-end integrated logistics with also software and managed services and so forth. So very exciting to have spent time with our sales organization and our customers going through this. And yeah, a couple of years ago, I was asked if I want to move into this innovation side, essentially to bring this customer understanding and strategic orientation into the very cool capability that we already had investing in startups, and sort of use the power of external innovation to accelerate our transformation at Maersk.
Super interesting. I think having that like very in-depth, in the trenches kind of experience with sales people and with the customers must bring a very different sort of mentality about what companies are interesting to you than a typical person in venture capital, I would say. So not to say that it's, you're completely unique in that. I know that there are people who have, tread that path before too, but very interesting, especially over the last few years as Maersk was changing its sort of outward profile to the customer base. So I first came upon Maersk Growth maybe 4 years ago when I met with Sune, who was the original sort of head of Maersk Growth before moving on. Can you give people a little bit of background on kind of how Maersk Growth got started? What was the idea behind it, and sort of how you view yourself right now in this very crowded landscape of venture capital?
Yeah, I'd like actually to start with maybe just a couple of headlines, which I know is not news to you, but just on what we're trying to do at Maersk and how growth fits into that narrative. So
yeah.
you know that we want to become the global integrator to connect and simplify our customers' supply chain. So it's not just a shipping line, and it's not purely an asset-light freight forwarder. It's something in between that has not really been done before. And we want to do it with the power of technology. We're very deliberate about that. we don't want to do it by throwing armies of people at it, which is traditionally what all of us in the industry have done. And I think, back in 2016, essentially 17, I was part of the core group working on the first slides of integrator. Should we put that word in the slide, and what does that actually mean, and so on. We sort of had this ambition and the vision, and we planted the flag, but we actually, very contrary to how we typically did things at Maersk, we didn't have a detailed roadmap on how exactly we're going to get there. It was working in a very new way of co-creating with our customers and partnering with other parties in the ecosystem to be able to achieve that. And back in 2017, actually, originally, Maersk Growth was established initially as an adjacent, so as a company builder to build adjacent businesses. And I think after a year or so, after a massive cleanup and going through the motions, there was an understanding that perhaps this is not the best innovation tool to use given where we are in our strategy. Because if we want to become integrated, we shouldn't start building stuff on the side, and requires a different level of organizational commitment. So we moved to the team then in mid-2018 to actually investing into startups, and that was the very first investment that we made. And it was a way to work early on with the entrepreneurs who have an exciting proposition, and we can partner with them along the journey. And I think the team did a brilliant job establishing a very professional venture setup and networking and a network, and we have access to great deal flow. And we have this very cool capability. However, the board felt, and our CEO felt, that we could leverage it even more now that we became much wiser about our strategy. 18 and 19, when these guys started, I was on the other side in the sales. We barely understood what the integrator meant still. So it's very difficult to actually really help give them guidance on, invest in these areas, or we're looking for this. But over the years, we have really matured and articulated our strategy with, from a product perspective, from a customer segment perspective, from a tech perspective, that we're actually now in a really good place to collaborate on this. And I think, Eric, you've known us for many years, and I've been in this company many years. I think truly in the last 3-4 years, we have fundamentally changed our culture and our attitude in how we do things. And I think the scope of what we want to achieve has humbled us really. And it became super clear that we cannot do this ourselves. It's not possible, which is why partnering with startups is one way of being able to accelerate what we need to do. And I think the best part is that we're becoming very deliberate about what must we build ourselves. Mm-hmm. We have hired 2,000 plus tech engineers in the last 24 months. So we have amazing tech talent that we've never had before in our company, and guys who come from, the big tech companies and really top class talent. But even if we wanted to build everything, it would take us a million years, right? It's not due to lack of talent. It's just the magnitude of what we need to do. Yeah. And I think that is exciting because we're very clear and honest and transparent with the startups that we have opportunities to work on together.
Very interesting. I really appreciate kind of taking us through that evolution, because you're right. It was such a big idea that it's hard to communicate what big ideas actually are and what they mean, and how Maersk Growth fit into that wasn't always clear. And I know it's evolved, right? So I wanted to sort of step back for a second and sort of help people who have heard VC come up a million times over the last decade in logistics, but sort of understand sort of the benefits and maybe some of the challenges of being part of a corporate venture capital group versus sort of I guess I'll call it traditional venture capital, which is you're not necessarily affiliated with a corporate, company, but you may have partners in the corporate side, but you're not. It's a different relationship. So could you maybe go into like how you see the differences and what maybe the benefit of your structure is versus kind of traditional VC?
Yeah, that's a really interesting one. So I had a real crash course when I joined 2 years ago on VC and what that is, and of
I'm
course
still getting. I'm still getting. I do a crash course every single week, and I still don't know.
yeah, no, it's fascinating, and honestly, if you've been in corporate, yes, of course, we know of startups for a long time, but it's a bit of a parallel universe, I would say, for the way it operates and everything, and you need to be able to speak a completely different language than corporate language, which is why a lot of startups and corporates collaborations fail, because there's just it's really very different universes. And then being a strategic venture capital or a CVC is a whole other thing on its own. When I joined, the guys in my team who come from VC, they kept saying like that our reputation is really important, and that we have built something really good, and that all CVCs suck, and we must, or most CVCs, and we must be some of the better ones, and we have the respect of the normal VCs. And I didn't really get to what extent that was until I as part of my first few months just understanding the lay of the land, I spoke to 30s to understand how they work and what they do and so on, and also some VCs externally, and a few things were my takeaways. A few things were very clear. First, there is this spectrum of, are you financially oriented or are you strategically oriented as a corporate VC? Mm-hmm. And then what you choose or what your strategy is will sort of dictate also how you make decisions and what type of companies you invest in, and so forth. And some CVCs move along that spectrum also over the years. So a pure VC essentially is to drive financial returns. Nowadays, there's some that have impact on top and sustainability and save the world and so on. But essentially, you're driving financial returns for your limited partners who have put money into the fund. A corporate VC that drives financial returns essentially does the same, but with corporate money, perhaps with also other people putting money in, and still driving financial returns. To me, this is sort of, I would say, the easier version of a corporate VC, because essentially you have freedom to invest in whatever is relevant and set up the right structures and incentives and so on to all be aligned towards that goal. Then you have companies that are oriented towards the strategic side, where it becomes, frankly, a lot more complex and a lot harder, because you have to balance a number of stakeholders and a number of interests in the most fair way where everybody wins still. So, you have to accelerate the company's strategy while making sure that we also give back to the ecosystem and help the startups grow, because it has to be a give and take. It doesn't work if you only do it one way. And here, actually, there have been some horror stories of how not to do it, if I can put it that way. From, there's an inherent paradox from a corporate that runs on an annual cycle to a venture fund and a relationship with a startup, especially if you invest early stage, that lasts 7 to 10 years, right? And do you have to ask for funding every year? And is it going to be consistent? Because you have to follow on with the companies and be there for them for many years. And this on and off, now we're going into some not so great times economically, and every corporate is looking at cutting costs. Is the CVC outfit that's going to be impacted? So these are things that have happened over the years. Issues with people moving in and out and so forth. So I think my conclusion was there's no silver bullet, actually. If you want to do it strategic, and just to be clear, we are here to create strategic value from us. Of course, we have to be an extremely solid and good financial investor as well. There's nothing strategic about not making money, but that's not the aim in itself. It is actually to be able to help Maersk and the startups at the same time. and which is why, Eric, the single most important thing I have learned is it's super critical to define the why. Like, why do we exist and how do we fit in the company strategy? If we're not able to answer that and have executive organizational commitment, we shouldn't do it. So, for example, we have funding for it's committed for 10 years. I don't have to ask for it every year. We have freedom to make decisions. We don't need to ask for permission for every individual decision that we make. So we're really given the freedom and the trust, basis our understanding and collaboration with the business and the strategy to be able to do what's right and be agile and operate in the VC ecosystem.
Fascinating. I wanted to ask, do you think, because you addressed some of the things, obviously when I was sort of in those same learning stages about, okay, what is VC, then what is the difference between, because I heard the same things when in that learning phase, like, oh, corporate CVC, strategic partner, that's a bad signal, right? Like I heard that all the time 3-4 years ago. Just from an outside perspective looking in, I don't hear that same chatter, and I see so many more strategic investors associated with companies that I think 3-4 years ago would have felt like that was a bad signal to go down that road. Is it a matter of the CVC sort of model has just matured, or is it just that people better understand what it had to offer?
I'm not sure it has matured, or I don't know. There are people who have been in this ecosystem much longer who say it comes and goes, but there is, I believe, there's a new generation of really good CVCs who know how to do it right. Mm-hmm. And I also think some of the problems the world has to solve today, and we can talk about that in a bit, like decarbonization and sustainability and so on. I think corporates come with a really important power and leverage to actually accelerate innovation, and some of the startups are seeing that and more willing to work with that. I would say so. It's probably a mix of all of the above, and then I think a really important distinction also to keep in mind is CVCs come with. It's smart money, right? It comes with promises on ways to help the startup and help the company, and the pace of tech development in the last few years and how companies are really, transformational agenda are really accelerating across the corporate world to stay relevant. Honestly, the survival has also led to a lot more openness in how to partner with external parties. And now, I think in the last 2 years, 1 in every 4 deals includes a corporate.
Wow, amazing. Well, and I wanted to point out also that decision about whether to be strategic or sort of financially motivated, it's not even an either or necessarily, right? There are companies that have investments on both sides, right? So that's not a black or white issue, right? So let me address something that comes up a lot with Maersk, which is, you mentioned all the things that you were involved in as Maersk was sort of transitioning its role away from, being a vessel operator to, this much bigger ambition. I hear this all the time. Maersk wants to be a technology provider. Okay, they want to be this, that, and the other. And I want to ask you, as it relates to as an investor, right? Is having the Maersk brand attached? Is that a help? Is it a hindrance? Can it be both? Because, there's people I talk to who love Maersk, and there's people who've had bad experiences with some aspect of Maersk, and they're like, how can they be a technology provider to me if they, if the ship can't get on time to the port that they're supposed to be going to, right? That sort of mentality, right? So how do you sort of navigate that from an investment perspective with the brand that is so big and so well known in our industry?
Yeah. So I think everything you just described on the different reactions, obviously I hear those as well, but typically more from customers or people we already work with. I can say with confidence that there's a big bunch of entrepreneurs who have never heard of Maersk, and it doesn't mean anything to them because they're in the tech world, right? I mean, we were at Web Summit in Portugal a few weeks ago, and I think the most question we were asked is, what's a shipping company doing here? First, we say we're an integrated logistics company, and actually we want to be tech powered and tech enabled. So this brand piece, of course, it's relevant and important, but it doesn't carry as much into the entrepreneur world as much as which is super interesting when I realized that. Having said that, I think the first hurdle is, does this founder want to work with a corporate, regardless who the corporate is, because of all the drama we just spoke about, right? So and there are some founders who see the benefit that this could bring, and then actually we have some great conversations, and it's really important to align upfront on expectations, like what would we be able to offer them, and what they can, and how we can help them, and how we would collaborate together. So we sort of made a list of the, we call it our rocket fuel, of how we can help startups. And it ended up working out nicely, like A, B, C, D, E. So A essentially is our assets. So imagine a startup that does IoT, or for example, the green fuel startups, where they can we can promise offtake on our ships, as an example. And we've done a few of those investments. Another option could be, the second one is B, our brand. And here, of course, once we invest and partner with a startup, when they go to some of the customers who know us and say Maersk is an investor, it carries some weight, of course. Yep. C, and perhaps this the most important one of the list, I would say, is customers. So we have 89,000 customers. And because we invest early stage, it's actually still, when the startup, the companies have a few customers, 3, 4, and they're still establishing product market fit and so forth. So the fact that we can help with customer introductions and connections and offer joint customer value propositions is huge to help their top line and unlock the next funding and growth and scaling and so forth. D is data. And here, specifically companies that are working with machine learning and algorithms and so on, where they can actually, we're finding a way to create some kind of anonymized sandbox where they can train their algorithms and be able to actually have access to 20% of global trade data in a way that can fast accelerate the technology. Nothing a normal VC can offer, of course. And last but not least, which is also an important one, is the expertise of, we're now 100,000 people actually who have supply chain expertise.
Yeah. Fascinating. Well, you make a good case.
I do come from sales, Eric.
It's very, very true. Very true. Well, let's maybe get into some a couple questions around the market right now, and also what you see as kind of emerging trends that are really catching your eye, especially given that the market is, I mean, we were talking right before we went live about, you were just in an event, and a lot of the discussion at this event was about, yes, things are a little different than they were a year ago, but it doesn't mean there's not opportunities still out there. And this is something I hear a lot, like, yes, it's clearly different than 21, but it doesn't mean that it's a ghost town, right? So how are you sort of thinking about the market right now, and is it slowing the pace of investments? Is it affecting the size of investments? And then what are some emerging areas that you're really focused on?
Yeah, I'd like to first share a couple of just high-level numbers to just give an idea of the scale of innovation happening in our space right now. Back in 2015, 16, everything across logistics and supply chain in terms of venture funding was around $3-4 billion a year going into this. Then in 18, 19, it was maybe around $7-8 billion. Last year, $52 billion have gone into startups in logistics and supply chain. So there has been a crazy jump. And obviously, this is because of the pandemic, and it has shown the fact that some of us who have been in the industry for a while or always knew, but I think it has shown the rest of the world how fragmented and antiquated and fragile the supply chains are, which frankly excited entrepreneurs that these are big, hairy problems they can solve, and also encouraged investors. The incumbents must not know what they're doing. Let's put some money in and try to fix these problems. So it's really crazy how much innovation is happening. And what that means is the pace of disruption of what we can expect coming in the next 5 to 8 years is like nothing we have seen before. Yes, 7 out of 10 startups fail, of course, and there will be many who will not make it, especially with the current conditions. But there will be some who will emerge from this some years down the line extremely strong, because what has also happened in the pandemic years, as I'm sure you have experienced as well, is that customer needs have also reached a point where they want resilience, they want visibility, they want to be able to have significant more control on supply chains than before.
Yeah.
So I think the pace of tech advancement, together with the pull from the customers, is really our two accelerators and catalysts for the amount of innovation that's happening in the space right now. This year, we see the numbers going down significantly in the space of last mile, because this was very pandemic fueled, right? So there was a lot of money going into grocery deliveries and all these kind of things. But actually, if we exclude that, if the whole market went down 60-70%, supply chain only went down 30-40%. So they're still actually comparatively, it's still doing better. Yeah. Then if you look at late stage companies, this is really where the crunch is. Like, there are virtually no IPOs. And there's very limited exit opportunities. However, early stage, we're still doing deals with the same pace. Actually, this year we have done 8 deals in the first 8 months, which is more than we've done before. And there's still a lot of exciting things happening. The valuations and in general, the market has cooled down, I would say, to more reasonable and realistic levels, perhaps, than last year. And good founders and good tech will always find funding. And I think we'll have fewer deals, but better companies, because the marching order in general and every VC, this is the general sentiment is there needs to be focus on burn. There needs to be focus on what is the path to profitability, and it allows companies to focus and what's the core and how can they create really an exciting roadmap that hits customers' needs as fast as possible.
That you said reasonable and practical. I think the rationalization of expectations on founders, I feel like that has been a welcome for company. Obviously, if you were about to raise a round and you're running out of money, the timing was not great. But I think for founders who didn't necessarily like this growth at all costs kind of mentality that was starting to emerge last year, in place of no, we want to grow fast, but we know where we want to be and we have a path that we want to be. I feel like this year has gotten companies more along okay, this is a more reasonable path for us. Yeah. So that's very interesting. What can you throw a couple categories out that you're excited about specifically, and maybe one or two that you were going crazy during the pandemic, but may have run their course a little bit? You mentioned last mile, but more freight logistics specific, anything? I personally, by the way, before you answer, I wrote a newsletter a few weeks back about, I think there's been a lot of duplicate companies that have come up in certain categories. And I wonder if those just came up because there was money and not because there was actually a need for 7 different versions of the same thing. So not to get specific about which ones, but.
Yeah. So definitely last mile and everything in that space was a very hot trend the last couple of years, which we can see slowing down significantly.
Yeah.
Nobody, or very practical how to actually make money in this last mile space, or quick commerce, all variations of that, the 30 minutes and 1 hour and 2 hour and so on. So I think that one we will see far less of. What we see emerging, and this is also part of our role here at Maersk Growth. We look at these trends and we share with the business opportunities and threats, and what could it mean for Maersk? And I ask these questions, they have to answer them. But essentially, one trend that we see, which is a big question mark on, is this gonna impact us one day, is this whole concept of super apps and ecosystems and platforms. So the future of super apps as an enabler or feature for e-commerce, like mainly in Asia, and B2C phenomena, where you have WeChat that suddenly becomes where you live your life and so on. Is some of this going to come our way, and in what shape or form, and what does that actually mean for how we do e-commerce? I don't know if you've seen also TikTok now is actually becoming a very
they're getting into commerce. Yeah,
they're getting into e-commerce, and hashtag TikTok made me buy it. So this development on super apps, I think, is something interesting to keep an eye on. Then another trend that I'm particularly excited about, and I think is very much needed and welcome, is this everything as a service. So it's essentially moving away from selling products to selling outcomes, and I think it's a next step in customer centricity, and it's something that I think the customers in the pandemic have really realized and suffered from, that nobody takes responsibility in the fragmented supply chains that we have today. So interesting to see how this servitization will impact the logistics experience, and who will the winners be. And there's this big debate: can you really guarantee outcomes without assets? Is technology enough, or do you need to?
I think 3PLs would argue they've been doing everything as a service for their entire career. It's just not necessarily digital, right? All digital, or mostly digital, right? So that's.
But not outcomes, services, I would say.
Yeah. Yeah.
I think if you ask some of the BCOs if they could guarantee outcomes during the pandemic, that's probably not the case.
Very true.
Yeah, and I think it will be interesting to see also who, is it the tech savvy companies that are going to be able to do that because of the user experience and the customer experience? Then another one that we're very excited about as well is actually the whole automation piece and robotics. There was a wave of this some years ago, and I think it fell a bit flat. I don't think the customer demand was really ready. But now with the worker shortage and prices and so on, we can feel there's a new generation. We've invested in a couple of robotics companies. We think it's very exciting, because the world is ready now for warehouses to really become more automated, and you can link it into a bigger ecosystem. And then, of course, the data aggregators, the visibility, and what that will become, how big part of the customer experience will that eventually take over? Will bookings happen also with the visibility? There's a lot of interesting questions. I think
the lines are blurring all over the place.
Yeah. And then lastly, on a whole other field, there's so much innovation happening, of course, in climate tech and in sustainability.
We had a question that came up about ESG, so we barely even got to scratch the surface on that. So.
And I think, as I briefly mentioned, I think here corporates can play a very important role. While software is eating the world, as we've heard for many years, software alone will not decarbonize the world. So, so it's really about doing hardware and software investments to be able to crack this.
Yeah. Fantastic list there. I hope everyone was taking notes. 2 quick questions before we sign off. Favorite band and how come?
I would say Florence and the Machine, at least these days. Yeah. I find their music very raw, enchanting, and you sort of escape and disconnect to a different place. So
Cool.
Yeah.
I like that. At some point, I'm going to have to make a playlist of all my guests' favorite things so that everyone
Yeah.
can get, because we've had some really interesting ones. That's a great suggestion. Shereen, thank you so much. There was a question that came in about if you're a founder, what's the best way to interact with Maersk Growth? What's the best way to get on your radar?
growth@maersk.com.
Growth@maersk.com. So just reach
That's
out.
our email.
Okay.
And it's manned by humans, not
bots.
Not a machine. So we're very happy to review, and we're always open for any interesting startups in the logistics and supply chain space.
Cool. Carlos, I hope that helped answer your question. Shereen, thank you so much. This has been a fascinating conversation. I'm really glad you could join us today, and best of luck. Happy holidays, and have a great weekend.
Thanks a lot, Eric. Great to be here.
Bye. All right. So we are just about out of time. Just enough time for me to give you my corny joke of the week, dad joke of the month time, or dad joke of the week time. Sorry. What do you call a knight in shining armor that collects taxes? This is a good logistics one. Surcharge. Get it? Get it? Surcharge. All right. That's very appropriate for logistics and shipping and trucking and everything. So thank you so much to everyone who tuned in. Thank you everyone who submitted questions and comments. I always appreciate everyone's support for this show. I have so much fun doing it. Nicole, the producer, makes my life so easy. Sarah and the Let's Talk Supply Chain team rock it like nobody else. But thank you most to our guest, Shereen, and to you, the audience who tune in every episode. We'll be back in 2 weeks on December 2nd. Have a great guest lined up for you to get really deep on the subject of automation and logistics. Don't forget to sign up for TPM Tech and use that code 25% off, EJTPM25. And we'll see you all in 2 weeks. Everyone in America, have a great Thanksgiving weekend and hope you get some nice R&R. We'll see you soon. Bye-bye.